Hello everyone, welcome back to our channel where I track my net worth, holdings, and speak about investing. In today's video, we're going to discuss why the Vanguard S&P 500 ETF VOO might just be the best ETF out there. If you're interested in long-term investing and want exposure to a broad range of companies, VOO might be the perfect fit for you. Before we dive into the specifics of the ETF VOO, let's first understand what an ETF is. An ETF simply is a type of investment fund that is traded on stock exchanges just like individual stocks. It typically holds a diversified portfolio of assets such as stocks, bonds, commodities, and aims to track the performance of a specific index. So with that said, the primary purpose of VOO is to track the S&P 500, and the S&P 500 represents the largest 500 publicly traded companies in the United States spanning various sectors of the economy. The S&P 500 is widely regarded as the best single gauge of large cap U.S. equities. So basically, as the U.S. economy is doing well, we would anticipate that these companies that comprise the index do well, and the index will do well as a whole. One of the primary reasons why VOO is often considered the best ETF is its low expense ratio. The issuer of the fund, Vanguard, is well known for its commitment to providing low-cost investment options. The expense ratio of VOO is very low, meaning that investors get to keep more of the returns. This is particularly important to long-term investors as fees can significantly impact the overall returns over time. Now, if we compare the expense ratio of another popular ETF that tracks the same index, SPY, the Spider S&P 500 ETF, you see that the expense ratio is quite a bit higher here, sitting at 0.09%, so about 0.1%, whereas Vanguard is just a third of that. So out of the ETFs that track the performance of the S&P 500, the Vanguard S&P 500 VOO ETF is about as cheap as you can get. So another great advantage of the ETF VOO is its simplicity. By investing in the ETF, you gain exposure to a broad range of companies across different sectors, making it a great option for investors who want a diversified portfolio without the hassle of buying individual stocks. The simplicity also ensures that you're not overly exposed to any single company's performance, reducing the risk associated of investing in either individual stocks or industries. So on screen are the top 10 holdings of the ETF VOO. You can see here that it is heavily tech weighted, of course, because the S&P 500 is heavily tech weighted, as tech companies are a large portion of the overall US economy and the stock market as a whole. So you do see some companies that aren't really tech-based. So you have United Health Group and Berkshire Hathaway. And if we go to the second page, you see the diversity starts to show across industries. You have ExxonMobil for energy, Johnson & Johnson for healthcare, JP Morgan for banking, and so on and so forth. So you can see that the ETF is very diversified across many sectors and includes a lot of great companies. Another great thing about the ETF is that it is very commonly traded. You could see it has a 50-day moving average volume of 3.5 million shares, so it is traded plenty. So on any given day, you should be able to just go out and put in a market order and get your money, at least the current price for it, exactly at that time without any delay. It is practically as good as cash as in terms of liquidity. The ETF has a strong track record of performance, as the index does as a whole. The S&P 500 has done well, and as a result, the VOO ETF that tracks that index does well too. So the ETF has delivered historically solid returns. So I did a back test on several other popular indexes just to show how well VOO performed versus other well-diversified indexes, and to kind of give you an example of why you should pick this ETF over others. So we see that if you invested in the stock market as a whole, another popular ETF, VTI, Vanguard Total Stock Market ETF, you'd come out with about $39,984, where the VOO ETF that just tracks the large cap instead of all the minor companies, you'd come out on top. And I believe that this is over 10 years, just about 12 years. So during that time span, you would have outperformed the total US stock market index had you have just picked VOO instead, and you would have performed by a decent amount, about $2,000 or so. So not that much of a difference, but still enough for you to consider it over time. We see that there is a little bit of tracking difference, and VOO tends to do better over time, probably because the best companies generally do best in good economies, and they are the main drivers of economic growth. So those companies will continue to do better, while the minor companies may not do as well. And I also did another popular ETF, which is VEU, which tracks the companies outside of the United States. And comparing to the performance of VOO, it's basically night and day. You can see that VOO far outperformed the international market outside of the United States by far. So if you were diversified externally during this period, you would have made out with far less than the S&P 500 by a factor of about 2.5. So you would have been quite underperforming the United States large cap at that point. And another ETF I picked was the Russell 2000. This tracks kind of smaller companies, and you could see kind of the same thing. The VOO significantly outperformed by about double during that period. So this is why so many people invest in the S&P 500, whether it be through Vanguard or some other fund like the SPY Spider through State Street Global Advisors. So looking at this, you could definitely see the outperformance that the ETF provides, and this is pretty much about as good as you are going to get for a well diversified ETF that doesn't track a specific thing like growth or maybe like the NASDAQ, because that will outperform, or at least it will look like it outperforms over periods of time, because they generally track growth companies. Now, it's definitely important to note, no matter how well this portfolio is diversified or has performed over time, over the short term, there could be ups and downs. So if you're not a buy and hold investor, it probably won't do too well for you, because there are times when dramatic drops happen. For example, the COVID drop here, it dropped pretty significantly. And the most recent drop off the 2021 highs, it dropped significantly too. So had you have bought here and you held it for a short period of time and sold, you would have lost money and you would not be happy. So of course, as the US economy does good or bad, the ETF will definitely correlate to that, and you may gain or lose money based solely on the US economy. So just to wrap everything up and recap, VOO ETF, or the Vanguard S&P 500 ETF, offers investors a low-cost, diversified, and tax-efficient way to gain exposure to a broad range of U.S. companies across many industries. The simplicity, liquidity, and historical performance make it a great investment for various people, including and most particularly those that are young. So I just want to show you the 5-year graph of its performance, and you see that it did very well. Overall, it definitely went up, and you would have grown your capital. So I hope this video kind of served as just an introduction of the simplest ETF and probably the best ETF you can invest in. If you're a new investor, I think that there's some like information inundation that you get, and there are just so many investments across forums that you can talk about, and people recommend this ETF and that ETF, and I will show you an example of this information inundation. So I basically brought up on the Reddit community our investing, best ETF to invest in, and overall there are many posts about different things like artificial intelligence and whatnot, but this person here says that they had $10,000, where would you put it? VOO would be a great place. What are good alternatives to the S&P 500 when it comes to safely investing your money in a long time frame? So I'm not sure what they mean by that. Maybe they're looking for something else like VTI, but I don't know why they would pick that over VOO, as I just showed you. I have 5,900. I'm looking for best long-term investments. Again, VOO is there for you. Been looking to invest for very long term. Again, these people's posts can all just be answered by VOO, especially if they're under 50 years old. I don't really see too much risk if you are far away from retirement. So definitely for the new investor, you might be looking for ETFs. And again, just if you want to set it and forget it as simple as you can get and you're young, just the S&P 500 through Vanguard with its low expense ratio is a perfect ETF for you. And that is going to wrap up today's video. I do hope you enjoyed it. I hope it provided you some insight. If you did enjoy it, please give this video a like. It will be greatly appreciated, and I will see you in the next video.